Hello and welcome to Kemet Capital, a community of holders and seekers of African capital. I'm your host, JS, and before we begin with today's reaction, you guys will already know we start with our public service announcement, our idea of affirmation, our guiding principle. It's the Cobb and Douglas function, guys. On our way to make Africa great again, it's through economic power, economic strength, and for us, in order for us to achieve that, is by producing more in a more efficient way. So, the topic of today's reaction pertains to both the total factor productivity, which is the change in output, not from input, and also K, which is the physical capital. All right, guys, let's jump into this video that I found on the CNBC Africa. All right, let me just go back here and let's see what it's about. We're going to discuss that as we go along. Chop, chop.
Captive financing models stand as a sure bet to reaching corners of markets in doubling investments in the agricultural sector in Africa. Well, I spoke to Jahil Oliver on de-risking financing and strategies Africa can take to deepen food sovereignty.
I think the overarching theme is that there's real opportunity in agriculture and agricultural finance in Africa. I think when you get into the details of the report, what it illustrated was that the approach that Hello Track.
All right, guys, before we begin, let's just take a moment to discuss a little bit about Hello Africa, Hello Tractor, my bad. So, Hello Tractor is a technology driven, agricultural focused social enterprise based on the continent, and it connects smallholder farmers with tractor owners through a digital platform. So, basically, it's like a Uber for tractors. And it was founded in 2014 by the gentleman on the screen here, Jahil Oliver, and basically to address the mechanization gaps in African agriculture. So what does Hello Tractor does? It provides a mobile platform that uses GPS enabled smart tractor devices and a mobile app to track, deploy, and manages tractor services. It also allow small farmers to book affordable tractor services via agents using Hello Tractor app. So you have a tractor, basically it's like Uber. You have a tractor, you're not using your tractor, you want to put that tractor to use. Someone is looking to have that physical capital used on their small farm, they come to you through that app. So basically a brilliant idea in my opinion. So the owner also has a dashboard that offers real-time data analytics on tractor usage, location, and performance. And the goal and the impact of Hello Tractor is to improve productivity, obviously, through mechanization, allowing farmers to cultivate more land in less time, so more money in with less effort, to reduce labor costs, as I was saying, help tackle the rural labor shortage crisis. So if you're a young African farmer, you don't need to go to the city to make a living. You can stay in your local community and book those tractor services to improve productivity of your yields. It also enhances food security because guys, as a continent, we still import a lot of our food items. So to support the timely land preparation, increasing yields and income, and also create jobs by providing opportunities for booking agents, technicians and entrepreneurs in rural area. You'll need like mechanics to look after those tractors. There's a supply chain that can be put in place in order for this business to strive. And Hello Tractor so far operates. It started in Nigeria and today operates Kenya, Ghana, Mozambique, and Senegal. And the firm has partnered with organizations like the African Development Bank, John Deere, which is the world top producer in mechanical equipment, and also Agra. So all in all, a great initiative. I just found that very interesting for the continent that clearly lacks physical capital in order to improve efficiency and productivity. So let's see what Jahir has to say further. right there.
Tractors taking and introducing captive financing, bringing coupling a financial product with a real tangible asset is really how you reach corners of the market that were previously unreachable. So, and I think the success of that was expressed in the report where we had, 7.2% net profitability across the portfolio against banks and non-banking financial institutions that were negative 6% across their portfolios. And that's while reaching 100% traditionally unbanked entrepreneurs with our product. And exceptional credit quality as well. 1.5% NPLs, non-performing loans. So I think
Wow.
across dimensions that matter in credit and credit deployment for agriculture, we've excelled.
So, guys, I'm a little bit confused because this guy it seems like he's talking about like financial products, but he's in the lending business. I'm not sure exactly, unless I missed something at the beginning. You guys can tell me in the comment, but let's continue. What?
And I think that's a good lesson for the broader industry.
Quite interesting. And just picking up from where you left it at, agri-financing remains a really touchy subject across Africa. What sort of opportunities are you seeing in this space? How big is the gap? And what sort of approach should be taken towards this, especially from a partnership standpoint?
Well, absolutely. Agriculture is a touchy subject because traditionally it's been incredibly difficult to do. And that's why you see less than
Yeah,
2% of bank lending going into African agriculture, despite it being one of the biggest generators of employment and economic growth. And it's for good reason because it's a risky industry. You have climate
exactly.
risk, you have market volatility for these underlying commodities like maize and cassava and potato and rice. Um,
And guys, that's a great point that Jahir is bringing up because, in my opinion, we should be the owner of those. Uh, so I'm gonna rephrase my point. In my opinion, the biggest commodity exchange in the entire world should be in the African continent. Like point blank, point blank period. It should be on the African continent. We have the most arable land. We have the most share of the population working on in agriculture. So we should be the owner. We should be the ones setting those prices to circumvent the commodity risk that the price risk that he's talking about, that he's referring to. We need to be the owners of those prices. It's unfathomable, in my opinion, that you are a farmer in Ivory Coast and the price of your cocoa bean is set in Chicago. They've never seen cocoa bean in Chicago. That doesn't make any sense for me.
I think what we've been able to do as Hello Tractor is introduce a financial product that both recognizes and is designed to mitigate many of those risks while creating the necessary partnerships to de-risk further, right? And that's multidimensional. You have partnerships like Heifer International. They seeded the portfolio. They were the
Mm.
first one to take a bet before we started working with commercial banks and large corporations like John Deere. Heifer was the first to invest in the pay-as-you-go tractor finance product. But then we also expand
Okay, so the financial product that he's talking about is pay as you go. So you use the tractor as you basically self-explanatory, right?
those partnerships to include the likes of John Deere, the biggest tractor manufacturer on earth, but also our biggest investor on the equity side of the business to bring in their capabilities, which also further de-risks the work that we do. So really multidimensional. And that's how we've been able to achieve those outcomes by not going at it alone, but also including partnerships that can bring value and capital to solve some of the biggest problems facing African agriculture.
And this situation is a win-win for a company like John Deere. So basically, you are the biggest producer of farm equipment in the world. Let's say you have no footprint in the continent that that rely on agriculture the most. So for you to increase your brand awareness, you need to participate in ventures like Hello Tractor. So for me, as a small farmer in Africa, let's say I've rented through a Hello Tractor, a John Deere farm equipment for like several years. It has increased the yield of my land. My profitability has increased. Now I have capital to reinvest. Which company do you think I'm going to use for my farm equipment? It's going to be John Deere. So this is a strategic partnership for them as well, a huge partnership for them because the future of agriculture, maybe for the entire world, is the African continent. As I said, we have the most arable land, and we have the youngest population that is able to work that land. Imagine if we add mechanization to that, we're going to be a powerhouse.
Well, Jahil, when you look at the average age of a farmer in Africa, we're looking at someone above the age of 50 years. And this is sort
Wow.
of skewing the market. When you look at the opportunities for the young people
Yeah.
as well as the
Yeah.
smallholder farmers, this
Yeah.
becomes a very interesting conversation in terms of how
Hmm.
do we get farming to be more enticing, and at the same time, how do you ensure that it's
Yeah.
sustainable considering we're in the era of climate change?
Yeah, for sure. Which is another risk, right? Climate change and climate volatility. But we need
Absolutely.
our young people. I think arguably is Africa's most important resource. Demographics are in fact in our favor, but these young people need employment, right? And I think the
And guys, in this community, we already discussed a little bit about labor productivity and labor in general, the impact. We came to the conclusion that we need to reach like a balance of population growth, because if you have a large population and the productivity of that population is still lower than what it's supposed to be, so you're just having more poor people. What we need to focus on is to increase productivity. So instead of making $40 per hour, we're making now $100 per hour through platform like Hello Tractor, where you can have your farm equipment that raises the productivity of your farm and increases your revenue for the same hour of working. So for the same hour of work. Sorry.
really cool thing about the work that we're doing with the partnerships that I mentioned and this broader ecosystem of partners that we work with is that these tractors are not only economic engines for farmers and
Hmm.
reducing drudgery for these farmers while
Hmm.
increasing their income. We just did a report that showed income increases upwards of 220% when
Of
farmers have
course.
access
Of course. Guys, this is the beauty of mechanization. This is the beauty of capital deployment, capital allocation. You have physical capital that you can gonna have an economic benefit.
to mechanization. And that means making more money while having to do less work, which is
Exactly.
attractive
So,
for young people, right?
i.e.,
But
productivity of
beyond
labor,
that, for every tractor that we
doing
introduce,
producing
is
more
11 direct and
with less
indirect
hours.
jobs. So those are also employment opportunities for these young people to now engage in agriculture, but not like their parents, right?
Hmm.
Mhm.
Engaging in a variety of activities from tractor operation to
Hmm.
as tractor technicians,
Hmm.
as agents in
And why not? Maybe in the future we start to build our own tractors. We bypass John Deere. We have our own, I don't know, Nigerian tractor brand. Now the leader on the entire continent. We need to be thinking of those type of levels that are achievable to us. Look.
in the community, booking farmers for tractor services, earning commissions, to graduating to become tractor owners under this tractor
Mm,
financing program. So it's a variety of opportunities for young people to engage in
it's awesome.
employment opportunities. I mean, just as an example, a tractor owner on average is 10xing their monthly take home income by becoming a tractor owner,
10x,
right?
10 time increase in your monthly income by mechanizing your fields. That's huge, guys. Huge.
It's a great job opportunity, and young people want to be in their communities. They don't want to, migrate to Nairobi or to Lagos to find work. They want to stay in their communities, and we're
Mm,
giving them the financial incentives to stay in their community, delivering real value to the community through tractor ownership and delivering tractor services, while also making a good living for themselves.
yeah.
Well, finally, when you talk about just a fraction of 2% coming into financing in Africa, what would it take
Yeah.
to increase this number? And why are we still seeing
It will take, guys, I'm repeating myself in this community, but yes, that's the point we need to hammer. It will take, af- it will take our own resources. We need to stop begging those foreign lenders, those foreign capital holders, and start looking inward. Basically, that's my goal. That's what I'm striving for. Start putting the African capital to use towards those efficient usage like Hello Tractor.
a lot of the banks having this sort of warped view on the
Yeah.
farming as a business, and
Yeah.
also, of course, this has sort of
Especially in Africa. Farming
disenfranchised
as a
farmers
business
in
in
Africa.
Africa, it's like oxymoron.
Well, I can speak to what's worked for Hello Tractor, right? Number one, captive financing is was important for us. We understand our vertical. I don't think there are many players on the African continent that understand smallholder mechanization more than Hello Tractor and the team we have here that we've constructed over the last 10 years.
Mhm.
But then going beyond that, if you look at what can really unlock more financing going into agriculture across the broader continent and beyond just the Hello Tractor story, I think risk pooling needs to happen at a regional level, right? We
Absolutely.
have, as individual countries, volatile currencies. We have climate risk, right? We
Mm,
have commodity price risk. All these things make it very difficult to lend in agriculture as an individual country and certainly as an individual bank.
mhm.
But just like reinsurers pool risk to make insurance premiums lower, I think the players within the financial system who really want to advance agriculture, who want to make credit available to the smallholder farmer, to not only develop that smallholder farming community, but also create food sovereignty. So we're not importing our food,
Mhm.
we're growing our own food. We
Mhm.
need to pool risk operating regionally where the
Yep.
ag minister for
Yep.
Uganda is closely engaged with the ag minister for Kenya and working
Yep.
together, let's say with the Africa Development Bank saying, we're going to grow rice in our country. We need Kenya to grow maize. We're going to pool the risk, finance that risk pool together, reducing the interest rate,
Preach.
reducing the FX.
Preach. Oh my God. This guy is preaching. This guy is actually advocating for what I've been talking about for the last, I don't know, 10 weeks. This to be regional cooperation, global vision.
Volatility, making capital available at a reasonable rate so
Mhm.
our countries and the value chains that we support within these countries can be globally competitive. And there's
Exactly.
never been a better time to do this because of what's happening in the global trade environment. We have a very rare and special moment to take advantage of the volatility,
Mhm.
and but it's going to take partnership and cooperation.
Obviously. All right. An abrupt end of the video, as always, with CNBC Africa, but always great content, leaders in the African continent, the African community, which is what the focus of this guild is about. So, guys, let me know what you think in the comment. I enjoyed this video. I enjoy Hero Tractor. I'll try to learn more about that company, and I hope you guys do too. So, we'll see you in the next one, and let me know what you think in the comment. Bye bye.